Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Monday, and we're at the 2nd of December already, 2024, about 6:20 p.m. Central Time. Hope you're not caught in these storms that are out east, and I'm just hearing the nightmares of people caught in these, can't get home, and what it's all about. It's bad enough here. I think today in Chicago, we certainly didn't get over freezing. We were probably no better than the low 20s, and tonight we'll go back into maybe 10 degrees, something like that. It's not pleasant, I can tell you that, and we might get snow middle of the week. So I like to give you the wrap up there. A lot of us are home though, enjoying our time now after Thanksgiving. Stock indices just drifting tonight, sort of hanging here, but hanging near the highs, so they're not backing off. One of the things that I mentioned in my Spider ETF, and I'd like to hear is, I always get nervous when trades get crowded, and these are crowded. I mean, I don't know anyone that is thinking we're not going to get a year-end rally. How's that? Me included. So, that bothers me when the markets are one-sided. They have a way to spook you out, so be careful there. And it's not time for that Santa Claus rally to begin. So if you think just because you're in December, that's when it happens, no. If anything, the cycle up in the Dow ended today, actually on the 1st. And you're supposed to be out of the market if you're a true seasonal trader. In the energy markets, I still like the bear side of them. I don't see where there's supply problems. If anything, if there are supply problems, it's too much supply. I'm not seeing demand pick up rather dramatically. I'm seeing problems develop in Europe still. Germany's economy's in trouble. France, you see, they're probably going to get that vote going through. There's a no confidence vote and the current government goes bye-bye. They'll have to get a caretaker government. And then how do they pay bills? Because it turns into legal nightmares all over and political nightmares. So don't expect good things. I think the euros have a problem here, and that's why the dollar rallied so much. And the euro's sitting here basically at the 105 level having its own problems. Now, if we take a look at the S&P, if the market were to close here, you got a new high. I'm bullish. What can you say? All right, you don't fight that. The volatility has been getting smaller and smaller and narrower. Now, a certain amount of that range has to do with Thanksgiving. But just be careful here. This market has lost some of that pizzazz. You've got higher lows, higher highs. So until the market gets back under here, I'm still fully in the bull camp at until it takes out 59.76. So that's still bullish. The bigger support's 59.97, and I don't know that it can get there. The resistance, though, is right above the market, and I've said I think we will go through the 6,100 level into year end. So I am in the bull camp. I am not in the bull camp. And if you embed, I get even more bullish. Now, you cannot count tonight what these numbers are doing, but you can and have to count how the markets finished today, Monday. Both numbers were over 80. Both numbers were over 80 on Friday, and they were not here. So what is this going to mean? Do we get a Tuesday reversal? We weren't very much up or down today to worry about that. Normally you get a Tuesday reversal off of moves that have some muscle to them. I don't think we had that. But I wouldn't fight this, all right? If you get the embedded reading until it's lost, I get even more bullish. NASDAQ, still coming up. I know my traders in QQQ and my Spider ETF, I'm sure they're cheering away because they're in this market back over here, and they're basically doing real well in that now. In the micro Dow, same thing, bullish. Embedded reading. I think the pros want to buy this break. I think they'll get out of longs if the red line closes under 79, but until then, I think they'll buy the good break in the market if they can get it. And in the Russell, I still see an overbought market that has got a pattern of higher lows, lower highs. I am not bearish. It is just not my favorite index to be in. Doesn't show the strength of the others. When we take a look at the 10-year note, up to overbought and running the upper Bollinger Band. So you know you're in a resistance area when that happens, but you're no longer adding yield, and that's why we've gone from nearly the 4.5 level back to 4.183 in the 10-year note, and you're doing something sort of similar in the 5-year. The government, you know, when they come in with the Treasury doing all their auctions in the Fed, they affect everything from short-term, the 2-year, way on down. The smaller it gets, the more impact. We were looking, at least I was looking, for the correction in the dollar when you lost the bullish embedded reading right here. And I got what I wanted. On Thursday and Friday, the market fell into that 18-day average, and it's holding it right now. I expect this market to try to still develop bullishness. It's worked off an overbought condition. And the bearishness is still there, in my opinion, in the euro, but not in a chart pattern. You have a higher high and lower low. So both the dollar and the euro have gone through corrections, one to the downside, one to the up. Now we need better patterns to get involved from. Same goes for the British pound. I was looking for the market to get up here and sort of stall right here, and we're getting that exact move. And I'm still bearish in it long term. In Bitcoin, you've lost the bullish reading. So I'll go on the line and say, before you go up and back over this high, this 101,000, I think you can get a run to the 18-day average to try to figure out what to do next. On the energy markets, today I thought the market would fail against the 18-day average in my morning subscriber videos, and boy, was I on the money. And right here, you just got up to the numbers, and wow, that's all I can say. It looks to me like you still have the door open for the 66.50 level. You'd have a problem if the market got back over 70.70. I think the pros will try selling the market short on rallies into that 68.95 level. When we look at heating oil, the market's trying to come down here. That first cold spell we had last week, remember when I said, folks, expect that, and then expect the market to come down when the reality happens to it, and the same in nat gas. Check what I said. It's how the markets often work. And as I said, in nat gas, you keep your eye on this. This market has so much nat gas, it needs continual cold weather to work through the amount of supply. As I said, it's the largest supply we've had on record since 2016. So now we're in that draw period, and you're getting what you need at the beginning of December. Cold weather, snow, we've got the heaters on. I'm sure if you live in the northwest, northeast, middle of the country, you've got them on. If you're in Florida, you're lucky. Arizona, you're lucky. But even nighttime in Arizona gets, believe me, nippy. So that's how I'd play it, looking at it. So one final thing. Remember, we're having the sale, the Cyber Week. Go to iraepstein.com under research. When you hit your toggle there, go to yearly, put whatever you want into your cart, and away it goes. You will see the 50% discount. You can always move your cursor to the top here, and it'll take you to that area as well. I'll catch up with you all in the morning. Have a great evening.